I think it's going to be a good year for gold miners. We can already see developing interest in gold. We saw the central banks coming into gold through 2018, and we think they're going to be there to continue to support the gold market. Some of this is because has been so much currency instability and difficulty for certain central banks to know where to park their local currency, and also to manage currency flows. But also, we're not quite sure what's happening with inflation here. It's likely that the US Federal Reserve is not going to be able to continue to raise interest rates as people expect. The debt mountain in the States is such that it's so large now, they just cannot go back to 5% interest rates as they once might have done. So I think we're stuck in a lower interest rate environment for a longer term period of time. And this is likely to cause gold prices to rise as investors anticipate more inflation going forwards. Phoenix Global, for its copper and zinc in Idaho in the United States, good project actually, and good environment. Makango Resources, because it's got this very high grade discovery next to its existing resource in Malawi. Metal Tiger, looking like a good company. It sold its interest in the T3 discovery in Botswana to MOD Resources. Great sale, looks really good. Still, we'll get the money in next year, and so the valuation does not look demanding, and they are using that. They're looking to use that cash to make other interesting investments in the marketplace. One thing that could do well over the Christmas period is Petra Diamonds. Not only do diamonds sell well over Christmas, but Petra has invested huge amounts of capital over the last few years. It's now coming through to reap the rewards of that capital investment on a whole number of different mines, and we would expect costs to fall, revenues to rise, and in fact hopefully the value per carat sold also to benefit as more consumers buy diamonds. Well, the yield situation is very interesting, and we're really referring to Anglo American, Rio Tinto and BHP. Yes, iron ore prices, and particularly prices for good quality iron ore, are very high at the moment. 62, 63, 65% iron ore, getting great premiums in the market because China wants clean, good quality iron ore, and it's not buying the cheap stuff from India anymore. And so this is giving Rios and BHP billion-dollar returns. Anglo American has a bit of iron ore itself in Brazil and in South Africa. Glencore doesn't, but Glencore's still making very good returns off its copper and cobalt, although it has upset the Department of Justice in the United States, so it is likely to get quite a big fine off that as a result of what's been going on. So probably for your more cautious investors, stick with the big yielding companies, Rios, BHP. Not only are the dividends going to come from iron ore, but also high coal prices, thermal coal, metallurgical coal, mainly the thermal coal side of things, because China still needs more electrical power generated to feed its growing economy, its growing manufacturing industrial base. And so where else is this coal going to come from? So Rios and BHP produce the best coal in the world pretty much. They ship it to China more reliably than anyone else. So these are the stocks to buy for solid dividends from these companies. I think my favorite is Rio Tinto. It's safe and boring, but there's still plenty of upside if you consider that it has quite a broad portfolio of underlying businesses, any of which could do well. So it's got its Jadar project in Serbia, which is a huge lithium project. It's always got something that can come through the ranks, and it's got such a solid iron ore and coal business, mainly focused in Australia, but also with copper in Chile and the United States, where it will also add to its earnings. So I think Rios is a safe stock to play with.